Aditya, hi, morning. What a great day you're joining us. Practically, we were there yesterday itself. But is it just the euphoria that we'll have the current regime come back on 23rd, or is there something else that is leading to this?
Yeah, see, I think the euphoria is around the fact that, one, of course, there's a certain amount of relief because you didn't know what to expect, and now there's a certain certainty in terms of what you expect. I think the second bit is that you can look forward to basically the same government for a 10-year period. And, you know, that just provides you a certain amount of stability and continuity, which I think markets will typically tend to like. So I think that's where you're getting this strong bounce at this point in time.
But is this the best that it can get, or do you think now this is going to be the base for the next lap of the rally? Because this is still a time when you've got new tensions between US and Iran, you've got US-China still at loggerheads, and earnings haven't picked up the way they should have.
So I think this does raise the base, but in terms of how quickly and the scope of the next rally is concerned, I think that will depend in terms of how the business cycle tends to revive, what the government does towards making that happen, and clearly the global backdrop. So I wouldn't say that you're going to get huge amount of returns in the near term. I think this raises the base, but the next leg will depend on a lot of the other mixes coming together.
I have a simple follow-up question, which is that India 1 has enjoyed majority. What is that they were not able to do in that tenure 1 that they will be able to do in the tenure 2? I mean, they had a free hand. Nobody stopped them from doing anything. And, you know, some folks are telling me, look, you know, they had Raj Sabha majority only for half a period of the tenure, but half a period is about 2.5 years. So, I mean, logically, if I think about an economic reform and economic policy, which is what markets are voting for, what stopped exactly?
What stopped them?
Quite honestly, I think you have to look at it with two lenses. One is, I think governments have historically been looked at predominantly from an economic policy and a reform agenda. I think that is now muted. I think a lot of the rough work that had to be done has happened. Going forward, it's a question of how the government facilitates or jumpstarts the business cycle, and then the positioning of businesses and how their willingness to take on risk, which will determine how the markets move. So I think the role of government, quite honestly, has moderated this time around vis-a-vis what you had the previous time. And in any maturing economy, that should be the case. So I think in many senses, how you translate it into business cycle momentum, and that shifts it to how much you can stimulate the economy and, you know, in what way you do that, and what the monetary impulse is. I think that would be more of a determinant rather than pure reform. You're absolutely right. If you step out to see what the reform ask for the market is, actually there isn't any. You know, 5 years back or 10 years back, when you'd play into election cycles, you'd put out a list of reform agendas. This is what this government will do. Have you heard of anything this time around? No, you haven't.
Because policy paralysis before that was the key word.
It was the emphasis on policy also. I think you moved to a situation where the business cycle, where corporates are the ones who are actually going to drive the economy and therefore the markets. And I think that is a shift the market has to keep in mind. That's why if you ask me what the biggest plus of this win is, really the continuity, that you don't have dramatic change, which is what the markets don't effectively want. You don't want, there isn't an ask for dramatic delta in terms of the policy framework.
And is that stimulus that you're talking about going to lead to finally a broader market recovery? Because that's the part of the market which has bled most.
Effectively, you require that stimulus to, and you hope that the economic cycle will recover from it. So the nature of the stimulus, the extent of the stimulus, I think is what is actually going to count. You know, the economy has changed a lot over the last few years, particularly in this last term. So the nature of the response of the economy is still actually untested. And I think that is where people will still be guessing or making calls, rather than there being a certainty that I drop rates 50 bips and this is how the economy will respond. We don't know that. And I think that's why there'll be a trial and error that tends to happen. And it's a question of how much you push. But our view is you need to push, right? It's not policies that will actually get this economy going. It is a stimulus. It is liquidity, so that there is funding that is effectively available, and a lower rate regime. Because if you don't have that mix, it's going to be relatively hard to kickstart the economy.
You know, the mid-cap so-called Humpty Dumpty, which, I mean, some of the mid and small-cap stocks had become Humpty Dumpty yesterday. They've come tumbling down. So you've got Reliance Power 1% down, you've got Vodafone Idea 1% down, Adani group of companies. I'm not using the word Humpty Dumpty here, but some of the stocks which really reacted because of the exit poll, that event adjustment is now getting more realistic. So yesterday there was only, you know, green across the screen. Today I think markets are saying that, okay, it's good news.
Reality setting in.
It's good news, but let's assess global risk, earnings cycle and valuations. So what is your advice to your clients?
So our view for the year is that the market is going to be at these levels or only a marginally higher.
And if exit poll would have given a different verdict, would you have changed your view?
Actually, no. We were relatively indifferent of government. What it would have done would have been what would happen in the immediate term. So I think the return that we were expecting have got a little front-ended. It might have got back-ended had the nature of government been different or the stability been somewhat different. But as I said, I think the predominant factor now is the business cycle and what the global backdrop is. And I think that doesn't really change with government. Policy does change, stability does change and does impact valuations. But beyond that, it's a question of the business cycle that you need.
You know, Aisha flagged off some concerns with respect to what's going on the globe. You're talking about concerns back home as well. And most of the experts that we've been speaking to said it's foolhardy to imagine that we could see an earnings recovery just because of what election does. That is a different event on its own. What, when it comes to earnings, should we brace ourselves for?
I think earnings, I mean, what's been interesting is the last quarter has seen a little bit of a dip, you know, not necessarily so much in earnings, but in terms of the demand environment. And I think what has changed for the negative is the fact that whereas you were looking at a new government to come in and then accelerate the economy, you've actually come into a situation where they first need to recover the economy before they start accelerating. So I think numbers will come off a little bit. I wouldn't focus so much in terms of earnings, right? Because to some extent you've had an extended trajectory of downgrade, so maybe a little bit more does not matter that much. What you'd want to see is actually a change in risk appetite. Whether it is businesses, whether it is individuals, whether it is people putting money into the markets. If you get that cycle going, the recovery from earnings will follow. Okay, if that cycle doesn't change, then earnings will tend to remain tepid.
There are two categories of investors. One who sold before the month of May. When should they come back? And those who have not sold in the month of May, should they sell now and go away?
I think it's a question of timing, and it's a question of, and that's the question, and how far out you are looking. I think fundamentally, it's a good time to get into equities. It's not a question of today, tomorrow, or the next couple of months, because I think the longer term cycle in the Indian market is actually good.
Why do you say that?
There's a fair corporate restructuring has gone on for 7 to 8 years. That's a long cycle. The asset cycle has been weak for many, many years. I think this is the first time you've got an inflationary cycle that's lower. So the RBI is beginning to think about inflation and interest rates in a different manner, right? Now, where exactly is the bottom for all of this? Was it 6 months back? Is it 6 months, 12 months down the line? It's very, very hard to call. But I think fundamentally you've had a very extended period of adjustment. When that happens, when it starts recovering, when it starts coming together, I think the recovery tends to be very long also. I think the challenge with the market, and for commentators like yourselves and ourselves, where you're trying to time it very cutely, I think it's not going to be necessarily very sharp, the recovery. Whether it is earnings, whether it is business confidence, whether it is investment, which will effectively mean that the market's response will also be a little bit more lazy than necessarily very sharp.
But you're not envisaging a big drop from here. You're saying we'll be roughly around these headline numbers.
I'd be surprised. I'd be surprised if there's a big drop. But the reality is, over the last couple of months, you've seen an economic cycle that has moved down. And sometimes, you know, I think there's been a lot of convenience in the market that they're talking about a dip and about a second half recovery. That could get a little bit more extended. It won't necessarily take too much off the market, but in terms of, you know, timing that bottom, it keeps getting pushed out a little
now,
bit.
There are a couple of sectors where you would say, look, change has happened. Entire IBC and NCLT, you know, change which has fixed the banking sector. GST has rolled out. Now, we may argue that it will have... I mean, I was hoping to see an impact last year, but if not this year, next year you will see an impact. Where do you think some of the structural changes, what NDA 1 did, where we were hoping for early evidence and early green shoots, will now be visible in next 6 to 12 months, irrespective of the election cycle?
You know, again, it's hard to time it in terms of 6 to 12 because both with the IBC and with the GST, which have really been some of the more major changes, we've been expecting it for a period of time. As I said, I think timing it from a quarterly or a 6-monthly perspective remains a certain amount of a challenge. But longer term, it actually sets the backdrop or the basis for much better growth. It, again, I'd like to reiterate, it does not correspond to accelerated growth. It corresponds to broader growth, more sustainable growth, but not necessarily accelerated growth. And I think that's where the market, and as I said, shorter term commentators like us who do keep looking at the short term, I think that's where we tend to run a little ahead of ourselves.
So is this the time to buy, and if so, what do you buy?
I think in many senses, I think an extended period would be a decent time to buy. I wouldn't say just go and buy it today, because I think shorter term the returns are going to be a little weaker. Yeah. But if you ask us in terms of sectorally, I think the financials is a good place to be in. I think consumption, even though it's in the staple side.
Corporate banks, or would you buy beaten down NBFCs, HFCs, the larger universe?
I'd actually buy the corporate banks, because I think they've bottomed out more convincingly than the NBFCs, where there is a lot of policy input required in terms of how they actually respond. I think the consumption side is something that you should also look, even though at the moment it's probably not the greatest time to look at it. Because quite honestly, if you ask me, the fiscal stimulus that is going to come is going to be predominantly through income support and income generation kind of schemes. And that really, you know, gets the bottom end of the economy moving much faster.
And you've upgraded telecom to overweight?
We've upgraded there, because we see, I think you've had all the consolidation you needed in the economy. I think the ability to price up, given that it's become such a basic necessity, to us suggests that that's a sector that's actually ripe. That's a more mature sector in terms of the industry structure, in terms of the restructuring that it has effectively taken, and in terms of the necessity of that space.
Okay. Aditya, appreciate your time and thank you for joining us.